Okay, so we have attendees joining in. All right. So a very good evening to all of you. Thank you for joining in today for our IFRS webinar. A bit of housekeeping before we actually begin. If at any point of time you are unable to see our screen or unable to hear us, you can always put it down on the chat box. I would recommend that you exit the meeting and then rejoin. If you have any questions, we have the chat box right open over here, and we will be picking up your questions from there. And yes, and I hope by the end of this webinar, you are enlightened with the knowledge that we are going to be sharing today. So this webinar is actually focused on understanding IAS 1 and IFRS 15, one of the most important accounting standards when we talk about IFRS. And of course, we are just not going to explain you IAS or IFRS 15 over here. So IAS 1, we're just not going to give you the definitions. We're just not going to give you the explanations about IFRS 15. Rather, we're going to give you a comprehensive guide with real-world examples. But let's start off with an introduction. So, moving towards the next slide, you will be able to see our introduction. So, I am Fiza Fatma, and I work as the manager and finance trainer at Kaplan Professional Middle East. I am one of the team members of our exam prep diploma and certifications team. We are focused on, like my team is focused on ensuring that you are able to enhance your professional skills with the help of diplomas and certifications in specialized fields. A bit about me. I'm not going to go much into the detail because the webinar is not about me, of course. So I am a qualified accountant. I hold a master's degree, and I've just mentioned that I'm a trainer as well. And I am also a content developer too for our B2B and B2C trainings. And as a part of my role at Kaplan Professional Middle East, I also focus upon our students' employability aspects, ensuring that it's just not the training that we provide within the classroom, but beyond classroom, how you can become more employable and how we can enhance your experience of being a part of the Kaplan student group. And with us today, our expert speaker is Malav Soni. I will leave your introduction to you, Malav. So over to you from here.
Thank you, Fiza. Before I start, I request all the participants, if you guys please switch on your videos as well. So let's keep this interactive, please, everyone. If you can please switch on your videos. Guys.
I think so they will not be able to do that, Malav, because
Okay.
since this is set up as a webinar, they will not be able to switch on their videos. But if at any point of time they would like to speak, we would be more than happy to unmute you.
Okay. So very good evening, guys. My name is Malav Soni. By qualification, I am a chartered accountant from India, plus I am an ACCA qualified. I have now almost more than 11 years of experience in the field of accounting, internal audits. Since last 4 years, I'm working more into academics and corporate training. So I take care of the CA coaching, ACCA coaching, diploma, IFRS, etc. And plus corporate trainings on the IFRS, Indian accounting standards, plus the internal audit segment. That is a brief introduction about myself. Thank you so much, guys. Fiza, over to you.
Okay. So, of course, this webinar is by Kaplan. And just to let everyone know who's on the call today, who we are. So Kaplan Professional Middle East is a part of Kaplan Corporation. We are a leading provider for training solutions. So we provide training for professional qualifications, technical and behavior development programs as well. And being a part of Kaplan, I take a lot of pride in telling that I am a part of Kaplan, a part of a network which has trained over 1 million delegates. And at at Kaplan, we all have the same passion, and that passion is helping our learners succeed in their journey of, aims in terms of what they wish to achieve, whether it is professional development in terms of behavior development or professional qualifications, or their wish to acquire technical skills. And not only that, we are across the world, of course, but in the UAE, we are known as Kaplan Professional Middle East. We're located in Dubai. We also have a branch in Abu Dhabi. And if you would like to visit us, we are always here, and we would be more than happy to welcome you in our Dubai office. Yes, so Malav, in that case, over to you. Here we start off with some very interesting topics.
All right. So, financial reporting, again, very important aspect. We know about the accounting standards. Now, every country is having their own accounting standards. Then why we are talking about global standards? What is a need of global standards? That is, first of all, we need to understand. Now, we know that, say, for example, if a company based out in Dubai, say, for example, wants to start a business into USA, or maybe say want to raise finance from the US stock exchange, or maybe from the US banker. Now, very simple thing it is, whenever we go to any banker or investor, they will first ask about that, okay, provide me your financial statements. Now, say, if I'm a company in Dubai, I am providing my financial statement to somebody in USA. Is that investor going to understand my financials? Maybe no, because Dubai, we have different accounting standards. US GAAP is maybe having some different requirements. So that is a difficulty. So that means nowadays, world has become global village. Lot of cross-border business is happening. Even companies are listed into multiple countries. Lot of, say, subsidiaries are also opened overseas. So now we can say that world has become one market. So there is a need of common accounting policies, common accounting rules, which everybody in the world can understand. So no matter if I want to invest in the company of US, so if I get the financial statement of US company, I am able to understand this because it is based on some common accounting rules, and that is called my IFRS, International Financial Reporting Standards. So there is no restriction now that, okay, whether I can invest in the US company, whether I can invest into, say, company which is listed into London Stock Exchange, no restriction. Because if I know IFRS, and IFRS now, companies all over the globe, it is mandatory for them, all the listed companies, mandatory to follow IFRS. So that restriction has been removed. So I can study, I can analyze, I can understand the financial statement, I can understand financial performance and position of the company, and I can take my, say, investment decisions in a better way. So moving on to that, so that is a requirement of the IFRS. Now, when we are talking about IFRS, I said they are common standards. So there is a common format of the financial statement as well. Now, many of us, when we are talking about accounts, say, we discuss about high-level accounting adjustment, some year-end adjustment, depreciation, deferred tax asset, deferred tax liabilities, etc. But from where accounting is starting, that is important point to understand. So my first question is, whenever a transaction is happening, first of all, I need to decide whether I can record the particular transaction into my books of accounts or not. Now, what is the criteria for that? Can anyone help me on this? First question, if a transaction is happening, say, for example, if buying a motor car, so can I record this transaction of a motor car in books of account? We know journal entries that, okay, I need to do asset account, debit to bank account, credit, but can I do this or not? That is the first requirement. So from there, we need to understand accounting. Can anyone? Fiza, anyone can help able to speak or not? Or shall I continue?
Yes, they should be able to speak. I am looking at the chat box as well, and also the panelist as the participants list as well. So I think so our participants are a bit shy, or I would rather say, I
Yes,
can
so
understand
again,
it's 7 o'clock over here in the evening, right after
right.
working hours.
So whenever again, so okay, let me answer this. Whenever a transaction is happening, so first of all, I need to see that whether the item involved into my transaction, whether it is meeting the elements of financial statements or not. So again, now you will ask that, okay, what are the elements of financial statement? I know there are 5 elements: income, expenditure, asset, liability, and equity. So first of all, I need to see that, okay, whatever transaction I'm doing, whatever the item involved into that, is it meeting one of the element definition or not? So I'm saying that, okay, I'm purchasing motor car. Okay, so motor car falls into the definition of an asset. Okay, so then I can record transaction into books of account. Fine. Now, okay, this is just a one step that, okay, can I record or not? But now how, after that, what? Again, before I move, one question that, okay, everybody knows, okay, we talk about accounting standard, but one question when I always ask to my student is, what are the areas on which accounting standards provide guidance on? So there are 4 areas. Number one, my first question, can I record transaction into books of accounts or not? So that is called recognition. So I need to refer particular accounting standard and see the recognition criteria. Okay, if that criteria are satisfied, the second question will come, at what value we can record it. So for that, standard provides for measurement criteria. Okay, measurement valuation is also decided. Now, third question will come about the presentation. So whether it is going to be part of my statement of profit loss or statement of financial position or statement of change in equity, into statement of financial position also, whether it is current, non-current, how it is. So for that, we need to refer presentation criteria. And last is disclosure requirements. So what are the additional information that we need to provide so that users can understand the financial impacts, performance and position. So whatever transaction we have recorded, additional information so that transaction can be understood well. Now, this are the introduction that, okay, why accounting standard are required and what areas where they provide guidance on. Now, moving on to financial IAS 1, it talks about the presentation. So first of all, when I'm talking about financial statement means what? So financial statement means it has 5 components: statement of financial position, statement of profit loss and other comprehensive income, statement of change in equity, statement of cash flows, and accounting policy notes and other explanatory notes. Now the question is why there are 2 different types of notes: accounting policy notes and other explanatory notes. So accounting policy notes basically means we have format of statement of profit loss where on face of my statement of profit loss, I can see only revenue, but what is the breakup of revenue? That is part of my explanatory note. Accounting policy note means what policy we have applied. So say if I said a very small example, inventory. So inventory can be is valued at cost or NRV, whichever is lower. So what policy? This is policy. This is we have to write in my notes to accounts. So first is components of financial statement. This 5 statements are. So whenever anybody say that financial statement, it includes all of this. This elements we have already discussed. So whenever a transaction is happening and it is meeting one of the element definition, then only transaction can be recorded into books of account. As I said, IAS 1 talks about the format. So here we can see this is a statement of profit loss and other comprehensive income. So we start with revenue. Does the transaction meet the recognition and can be cut under elements of Bharat? Elements of the financial statement is a first step. There first it will be decided. So first we need to see whether it is element or not, and then only we go to the specific accounting standard. So conceptual framework of accounting says that first of all, I can go into transaction only when if it is meeting the definition of element. After element only, see if I'm talking about motor car, same way to just to elaborate. So motor car is an asset, but we have different types of asset. We have tangible asset, we have intangible asset, we have current asset, we have non-current asset. So which, and we have different accounting standard applicable for all these different kinds of assets. So then we need to see that, okay, which standard is going to applicable, and then we need to move on to specific accounting standard. And I hope, Bharat, I am clear now. Your question is answered. All right. So the statement, we can see revenue, cost of sales. We are having gross profit, other comprehensive income, other operating income, distribution cost, admin expenses, other operating expenses, finance cost, profit share from associates if where this is part of a group accounting, income tax expense, profit for the period. Here we can see other comprehensive income. Now, important to understand is what is the difference between statement of profit loss and statement of other comprehensive income. So statement of profit loss means we recognize only the realized incomes and expenses during the year. Other comprehensive income, we basically recover which are not realized one. One of the example, if I would say that, say if I increase or if I revalue my building at market value, or I can say at fair value. So my building value is increasing, but I'm not selling my building as of now. So I am just increasing my value in the books of account, but I have not realized anything into cash. So that is, as of now, whenever I'm doing revaluation, it is called my unrealized profit. And I cannot put my unrealized profit into statement of profit loss. Otherwise, my statement of profit loss will become volatile. So that is the reason we are having the second part is other comprehensive income. So statement of profit loss, we will get profit for the period. Other comprehensive income, this kind of unrealized items we record. And when we total, we get total comprehensive income for the period. Then again, a very important statement is statement of change in equity. So whenever we are looking at our balance sheet, or if I would say to my statement of financial position. So on the equity and liability side, we get first equity, share premium, retained earnings, etc. But we only get one amount. Now, statement of change in equity made for this also, these items also, we need to provide a reconciliation statement that, okay, what was my opening balance? What are the transactions that happened during the year? So it may be current year's profit, distribution of dividend, any kind of revaluation surplus, any share premium, say any equity options, whatever transactions happened during the year, this is, we can say this is a reconciliation statement. And closing balance, what we can see here, that will go to my statement of financial position or balance sheet. Now, IAS 1 also says that, okay, we are talking about presentation. We are talking about financial statement. But how my financial, there are certain rules, there are general features. Number one, going concern. So going concern means what? I see that, okay, my business is going to be in existence for unforeseeable future. There is no end to it soon. So that is, and assuming that we do our accounting. Consistency means whatever accounting treatment, accounting policy we are following, whatever presentation we are applying, that we need to apply on a consistent basis over a period of time. Offsetting. So offsetting means, can I offset my income or expense? Can I offset my asset or liability? So for that, IAS once that says that we need to see particular accounting standard. If it is allowed by the standard, if it is allowed by the statute, then offsetting is permitted. Otherwise, offsetting cannot be done. Accrual basis, we know that what is accrual basis. So as and when income or expense is say arise, or we can say income is earned or expense is say arise, then only in the same period we need to record the expense. whether the cash settlement has happened or not. Materiality, again, very important aspect of the financial statement. So IS1 says that each and every material transaction has to be disclosed separately so that users can understand them well. Comparative information, again. So comparative, you guys must have seen the actual financials. I'll share one of the actual financials also with you guys. So information is always provided in a comparative format, current year as well as previous years. So we can compare and see that, okay, what is the change into current year's performance as compared to the past year. Last, it talks about the disclosure requirements. So disclosure IS1, again, presentation, accounting policy we are talking about. So IS1 talks about presentation. Presentation says that we need to prepare financial statement in a specific format. So there is a disclosure we need to make that these financial statements are prepared in compliance with the IFRS standard. Now, very important point here is entity has to follow all the applicable IFRS standard. If any one of the or any stand say partial compliance with the IFRS is there, that in that case, this disclosure cannot be made. So disclosure can only be made where 100% compliance is there. Disclosure about the accounting policies, as I said, that inventory cost or NRV, whichever is lower, one of the best example for the inventory. If I talk about property, plant and equipment, so whether we have followed cost model or revaluation model, sources of uncertainty. So in financial statement, lot of places we used our management judgments. If we talk about provisions also, so there we need to use some estimates. So in case of these estimates where reliable measurement cannot be made, or we can say the sources we have used, they are not so much certain. So that disclosure also we need to present that, okay, yes, these are the areas we made these estimates, but the information which we have used is not too much certain. So that disclosure also to be made, and any reclassification adjustment disclosure that can be done. So reclassification, I would say, we talked about statement of profit loss and statement of other comprehensive income. Now, I'm not going to detail as of now, but there are certain transactions which can be reclassified from statement of other comprehensive income to statement of profit loss. So any such adjustments are done, that we need specific disclosure about the same. So before I move on to IFRS 15, this is the real world. This is financial statement of Infosys based on the IFRS standards. So this is the format of balance sheet, or I can say statement of financial position. So you see, we can see that this is on a comparative basis. This is for March 23, comparatives are March 22. This is the format. Asset side, it is divided into two parts, non-current assets and current assets. Then it comes on equity and liability. So this is equity and liability initially. This is equity share capital. This is other equity. So here we can see this is other equity is one single amount. The format which we have seen for statement of change in equity, total of that comes here. So this is on the face of statement of financial position, I can see only one amount, but how this other equity is coming, for that we need to prepare statement of change in equity. After equity, we'll get liability. So liability is also same as asset. We need to bifurcate between non-current liabilities and current liabilities. So this is my statement of financial position. This is my statement of profit loss. Same format as we have seen: revenue, other income, total income minus expenses, profit before tax, current tax and deferred tax. This is other comprehensive income. So we can see this reclassification adjustment, what we have discussed. So this includes two different types of items. Items which can be reclassified and which cannot be reclassified. So see, this will not be reclassified. This is classified to profit loss. So this bifurcation is there into other comprehensive income. All this thing we will learn in detail when we go for the full-fledged batch. But as of now, with limitation of time, I cannot get into details of this. Yeah, but this is my format of statement of profit loss. Then
Malak's talking about comprehensive income over here. So just
yeah.
to put in a question from one of our attendees, and that is,
Mhm.
what is the difference between total comprehensive income and profit for the year?
Profit for the year means it is coming from your statement of profit loss. So the profit, your realized profit. Total comprehensive income, as I said. So one is, as I said, revaluation surplus. So I'm increasing my, say, value of building in books of account, but I'm not realizing anything into cash. So that is my unrealized profit. Second is if I have a foreign subsidiary. So whenever I have a foreign subsidiary, as a group accounting practice, I need to consolidate financial statement of subsidiary. So because of that foreign exchange rate difference, it will result into foreign exchange translation reserve. But all these items are as of now unrealized profits. So when I total profit for the year and these other comprehensive income like unrealized income, when I total this, that is my total comprehensive. So total comprehensive income, I would say my realized profit plus unrealized profit, that is my total comprehensive profit.
So
That is
Aditya,
total. Yeah,
yeah,
I think
I hope that answer your question. And we have another one from Bharat. How about qualitative and quantitative elements of financials?
Bharat, can you just put the specifics? I'm not able to. Qualitative, quantitative, I guess there is more part of disclosure part. So there are some qualitative information also that we need to disclose. That is part of my accounting policy notes. And quantitative disclosures, as I said, see this change statement of change in equity, or say if I say my trade payables. So trade payable also there is a separate working note that is a quantitative that okay based on the aging schedule that okay 30 days overdue, 90 days, 180 days, etc. That is quantitative information. Wherever we have used estimate, that is quantitative information. Whether we have used cost or fair value. If we have used fair value, then how fair value is determined. That is all quantitative information. And the qualitative means okay, apart from which cannot be measured in terms of say amount, where some we need to provide some descriptive information. That will part of my qualitative information as a part of disclosures.
Perfect. So that's for now. Keep your questions coming in, attendees. We would be more than happy to take them during this webinar, perhaps towards the end of it as well.
This is my statement of change in equity. So see, we can see that equity share capital, capital reserve, capital redemption reserve, security premium, retained earnings, general reserve, share option plans, SEZ reinvestment reserve. This is OCI, equity instrument to OCI, cash flow hedging. This is again, Infosys is a bigger company, so we will see a lot of items into change in equity. Then next statement would be my cash flow statement. Long change in equity, so many transactions. This is my cash flow. So cash flow, I would say, basically it is divided into three activities: operating activities, finance activities, and investment activities. So cash flow basically talks about from where cash came into business in the past year and from where entity has spent cash. So that is inflow and outflow of cash. We can get it from the statement of cash flow. So this is basic about the financial statements. If I coming on to now next is, so this is brief introduction about the IAS one, that how financial statements are prepared, etc. Now moving on to next topic is revenue recognition. Now again, Now we have many standards, all like, but there are certain, so maybe say for if I talk about say IS 21, effect of changes in foreign exchange rate. Now, not necessary that every entity is having some foreign transactions or maybe foreign subsidiary. So IS 21 not applicable to the companies who are not having any foreign exchange transaction, but revenue is a standard with every entity because that is day-to-day affairs is I'm talking about. So we simply understand that, okay, whenever I'm making a sale or whenever I'm providing services, again, okay, I simply record sale transaction into my ERP system. But we need to understand it is not just a recording entry, it is a 5-step process. So revenue recognition cannot be done simply that, okay, sale is made, okay, I need to a customer debit to revenue credit or maybe cash debit to revenue credit. We need to follow these 5 steps. If all these 5 steps are satisfied or completed, then only revenue can be recognized. So step number 1 says identify the contract. So contract means there is an agreement between two parties. So maybe one is say buyer and seller. Now, whenever a contract comes into our mind, we always think that it has to be something in written. Now, here contract not necessary to be in writing. It can be written contract, it can be oral contract, or maybe it can be as per the customary business practice as well. So normally we go to say purchase of grocery on our day-to-day life. So we do not do any written contract over there. But there is a best customary practice that, okay, I'm going to make payment for the groceries and the grocery shop owner is okay. Against payment, he is going to provide me the groceries. So that is a agreed practice. So that is a one type of contract. So first revenue thing, first point is we need to identify whether there is a contract or not. Yeah, there are certain criteria that whether it is a valid contract or an invalid contract. I'm not going to details of that as of now. But first step is identifying the contract. Okay, once contract is identified, next step is identify the performance obligation within a contract. Now we are talking about revenue recognition. That means we are talking from the point of view of seller. So we need to see that in a particular contract, say how many performance obligations, say for it can be one, it can be more than one. Say for example, I am selling machinery and I'm also providing technical support for the same. So I have two different performance obligations. One is to provide machinery and second one is to provide technical support for the same. So in a particular contract, we need to identify that, okay, how many performance obligations are there. That is my second important step. Not necessary, it can be one, it can be more than one. If it can be only, say, provision of goods only, or it can be only provision of service, or it can be bundle of goods and services also. Third important point is transaction price. So the transaction which is happening between say buyer and a seller, what is the transaction price? So basically transaction price means the price that say entity is expecting to recover against the service or goods what they are providing for. Now there are certain criteria where transaction price we can say can be changed, we need to adjust. That I'm not going into detail, but determine the trust. So it is not simply always a cash consideration. Sometimes transaction can happen in exchange of goods also, where there is no cash consideration involved. So in that case, how to determine a transaction price? If say, for example, there is an sale is made against say equity shares. So what is the transaction price in that case? So that is covered in detail into IFRS 15. So after transaction price is determined, my next step is we need to allocate this transaction price to the performance obligation in the contract. So in the step number 2, we have seen that we need to identify how many performance obligations are there. So say for example, machinery and technical support. So there are two performance obligations. So price what we are charging from our customer, we need to decide that, okay, how much I'm charging for machinery, how much I'm charging for technical support. So that bifurcation we need to make it. That is called allocation of transaction price. So how that allocation is happening? So that allocation is done on the standalone selling price. Standalone selling price means if I'm selling machinery only, then how much I charge normally from a customer. If I'm selling this as a standalone product, if I only provide technical support, then how much I'm charging. So maybe possible that here customer is buying both the say goods and service both. So we may have offered some discount. So in that case, proper allocation of the transaction price is important. And the last step is recognize the revenue when performance obligation is satisfied. So performance obligation is satisfied. I'm saying that say machinery and technical support. So when I deliver the machine, when I say physical possession of the machinery is transferred from seller to buyer, so I can say performance obligation is completed, but technical support is not yet provided. So by the reporting date, I need to see that, okay, whichever performance obligation is satisfied, only that part of revenue I can record, not other part. So as and when completed, then only revenue can be recognized. So this is a very brief about IFRS 15. It has a lot of things in detail. So that is from my end. Now, any questions? Over to you, Fiza.
Well, thank you, Mala, for that. So, of course, if you want to know the details of these accounting standards, you can come to our program, our Diploma IFRS program, where we discuss these standards, whether it's IAS 1, IFRS 15, and many more, of course. But the question is, why would you want to study with Kaplan? Well, at Kaplan, we have specialized trainers, one of being Malav Soni, and we have an or more team of trainers. So, of course, we have a dedicated team to train IFRS. And not only that, we have interactive sessions. So, whether you are joining in online, that doesn't matter. We will still keep it interactive. You can always put your questions on the chat box or unmute yourself. It will be as if you are actually attending the class face to face. And just in case you happen to miss your class, let's say due to work commitments or other commitments, rest be assured, you can always catch up with the class recordings because our sessions are recorded as well, and those recordings are uploaded within our learning management system. So our LMS system, where you not only get the recordings, but our other materials as well, whether they are class notes or study notes, or to put it very simply, our materials basically. And also, just to add up, we do have pre-recorded sessions in case you would like to have a quick recap of the basics of accounting, or you would just like to get some extra knowledge from there, from the basics, and tackle the knowledge gap over there. We have pre-recorded videos to keep you covered. And not only that, we do have mock exams and candidate support. So this is just, of course, let me be very honest, this is just not for our Diploma IFRS, but whichever course you would come to us, we will have WhatsApp support for you. For whichever qualification, we'll have mock exams for you. So we do have some standardized elements across all the courses. But let's talk about specifically our Diploma IFRS program. So our program is basically divided across 3 stages: stage 1, stage 2, and stage 3. We have a total of 48 hours for preparation, and for our revision, we have dedicated intensive 8 hours for it. So the entire course is for 56 hours. And we would be recapping all the key concepts within the revision classes. And not only that, since I've just mentioned, we have 3 stages, sorry. So after each stage, we will have 1 progress test. So coming back to my point, which I accidentally said, yes, we do have 3 progress tests. And not only that, we will also have a mock exam to help you ensure that you're exam ready. Now, in terms of the study materials, what do we have? So we have integrated workbook, and this integrated workbook is designed and made by our IFRS content specialists. These are our own in-house materials developed by our IFRS content specialists. And not only that, within our integrated workbook, we have a question bank. So basically, you would be solving 180 exam standard questions to ensure that you get that pass in the actual exams. And not only that, we have over 100 plus questions to test your understanding. So just to let you know, as we will be doing topics and these standards, there would be test your understandings to ensure that you have taken the standard and you have taken the knowledge correctly or not. And I've already mentioned about the mock exams, but other than this, we do have WhatsApp support. So you can get your doubts clear with your trainer via WhatsApp. So if in case you missed a doubt and let's say it's after classroom hours, don't worry, you can still catch your trainer on the WhatsApp group. We have a WhatsApp group where we have a team to support you. And as I just mentioned, we do have our class recordings over our LMS portal. And that basically is the crux of it. There are more to it. And of course, you can get in touch with us in terms of our schedules or pricing. But that's pretty much it from my end. Do you have any questions? We would be more than happy to take questions if in case you have on the program features, or anything that you would like to ask us. Okay, so we have one question. Diploma IFRS, when is this training starting? How much does it cost? So the Diploma IFRS training is actually starting from 26th of September. And in terms of the cost, fee structure, and the detailed schedule, you can get in touch with my colleague, Nandini. So if you move to the next slide, Malav, so we would have my colleague Nandini's details. Here we have it. So we have my colleague Nandini's details. Her phone number is there. Her email address is there. You can drop her a line and she will help you with the fee structure and, of course, the detailed schedule as well. Okay. So, Faris, I hope that helps you. Any more questions do we have here? So if in case you're looking ahead to meet us, for instance, and you're based in UAE, just to let you know, you can drop by to our office at any point of time during our working hours. You can get in touch with us to know what are our working hours. You can book an appointment with one of our program advisors too. And we have a question from Aditya over here. Will there be more sessions like this coming up? Well, you never know. Yes, we would definitely keep you updated with any such sessions that we will be having. Of course, we like to have such webinars and such sessions, and definitely you would be updated when we will be having more sessions like these. You're most welcome, Tariq. I'm so glad that you liked the session. And also, if in case you're in Dubai and in UAE, we are having a networking event on Sunday, this coming Sunday, on 24th, 4 p.m. to 6 p.m. I will drop the registration link in the chat box. So let me just do that. In case you're interested to come and network with industry experts, so we will be having industry experts and a panel discussion over there. And if you're looking into how you can make yourself more employable, then get in touch over there. Our program advising team would be there as well to help you with our other courses, whether it's just IFRS or any other course as well. And moreover, just to let you guys know, this is one of those programs that we have made. Our IFRS diploma is there to help you with your professional skilling up, or to put it more simply, upskilling journey. So whether you are working profession or you are a graduate, recent graduate, so it is catering to needs of everyone and anyone who is interested to join our program. So if you're a working professional, want to upskill yourself, or a graduate who wants to get more knowledge about IFRS, this may be the program for you. When the recording for this webinar will be sent? Yes, it will be, Afshin. You will receive it. Oh, no worries at all. We have got you covered, Afshin. Even if you miss half of the session, you would be getting the recording as well for this. And if in case post the recording, you have any further questions, you can always reach out to us. So in that case, we can wrap it up over here. Thank you so much, everyone,
Just
for
to
coming in.
one thing add, just
Yes,
a second. So just everyone, this is just a very introduction part only. IFRS is again, it is too much detailed as we discussed. We are going to take the 56 hours of training with you. But one thing I can assure you everyone that okay, if you go for the, if you have knowledge of IFRS in the current scenario, it is definitely going to add value into your portfolio. So it is very helpful for
absolutely.
your, say, skills development, your career growth, your promotions into your existing organ. You can shift to different role also. This is going to be a very helpful. This is a current on demand trend. So which part of the world you are going to work, it doesn't matter. IFRS will help you everywhere. So I hope to see you
Absolutely.
all guys in our detail, the IFRS program, what we are starting. Thank you so much, guys.
Yeah, and even if you're living in any part of the world, you can join us for these classes because our classes are live online as well. So you can join us, tune in, and you don't even have to come in for physical classes. So what more can you ask for? In that case, a very good evening to all of you. Thank you so much for joining in. I know it must have been a long day for those who have been working, and thank you so much for joining in. And we'll be in touch then. Thank you.